So you think you want to buy your first house but have no idea where to start? Well, keep watching because today I'm going to walk you through that process. Hi everyone, it's Amy Solera. I work with a lot of first-time home buyers, helping them to buy their first house, and they often have no idea where to start or what this process looks like. So today I wanted to walk you through the process. The first step in the process is to figure out when you want to buy your new house. So when you actually want the keys handed to you, when you want to be able to move into the house. Maybe you're being transferred for work, or maybe your lease is up in March, and so you know you don't want to renew your lease, and come April 1st, you want to be able to live in your own house. Or maybe in January, you're supposed to be getting bonus money from your employer and you want to be able to use that money towards a down payment. So figure out kind of what goals you're working towards or what time frame you're looking at, and from there you'll be able to backtrack and figure out when you need to start the process. If you're planning on getting a mortgage or financing your new house in some way, it typically takes the bank or lender 30 to 45 days for them to go through the mortgage approval process. And then prior to that, you're going to be going out and looking at houses. And depending on what's going on with the current housing market, it could take you more or less time, just depending on how many houses are on the market. And the national average statistics for first-time home buyers is they typically look at 8 to 10 houses before finding one that they like. Step number 2 is making sure you're financially ready to purchase a house. Now, I'm not talking about getting a pre-approval. That'll be a later step in the process. But for right now, I'm talking about just evaluating your own financial situation. So what I mean by that is, are you employed? Have you been with your employer for at least 2 years? Do you have steady income? Do you have money set aside for closing costs and a down payment? How's your credit score? If your credit score is too low, then you'll be paying higher interest rates or higher fees to the lender in order to buy down that interest rate. If you don't know what your credit score is, you can go to certain websites such as annualcreditreport.com or creditkarma.com. Every year, the 3 credit bureaus allow you to get a free credit report. So make sure you know what's on your credit report. Make sure it's accurate. Check your scores and see if there's anything that you can do in the meantime in order to improve your score if need be. Often first-time home buyers, they'll say, I want to put down 5%, or sometimes they say 20%. That's rare, but sometimes first-time home buyers, they do have the goal of putting down 20%, but they have this number in mind of 20%. So if I'm buying a $200,000 house, they think 20% is $40,000. That's what I need to bring to the closing table. However, there are additional closing costs associated with the purchasing of the house. So this includes taxes. This includes money that the lender will charge you for originating the loan, the appraisal. These are additional closing costs that a lot of people tend to not be aware of or forget about. So if you have in mind, my target is 20%, you're going to want to account for additional money as well. Now, a lot of first-time home buyers aren't able to put down 20%, and that's totally fine. You don't need to. A lot of first-time home buyers will often ask for seller assist, and this is when you're asking the seller to help pay for some of your closing costs. So in addition to having enough money set aside for a down payment and closing costs, make sure you don't completely drain your bank account and still have some money set aside in case unexpected repairs come up, or if you want to make some updates or improvements to your new home. Remember, you are no longer renting, so you're going to have to start cutting your own grass. The landlord won't do it for you. So if you completely drain all of your financial resources from purchasing this house, then you might find yourself in a very uncomfortable and stressful financial situation. The third step is to find yourself a great real estate agent, and it's free. A lot of first-time home buyers don't realize that there's no cost to them to use a real estate agent when purchasing a house. When a seller sells their house, they pay the professional fee for both the real estate agent who lists their house and also the real estate agent who brings the buyer to the sale. In trying to find a good real estate agent, ask around family and friends. See if they have any recommendations, or see if they know of anyone who recently bought or sold a house and had a great experience with their agent. Check out the real estate agent's online presence. If they don't have much of an online presence, then they might not be someone that you want to work with. This is the digital age, and the fact that you're watching this video right now means that you like to utilize technology. So you probably will fit better with a real estate agent who utilizes technology as well. You can also ask the real estate agents if they can connect you with past clients so that you can have a one-on-one real conversation with past clients so they can give you honest feedback about how it was to work with that agent. If you click the link below in my description, I offer a free handout of questions that I suggest you ask a real estate agent before you decide to work with them, so make sure you grab that handout below. After you've found the perfect real estate agent to work with, they're going to have you sign something called a buyer agency agreement. And this is just a commitment on both of your parts that you're committed to working together and that they will fully represent you during this transaction. Step number 4 is to get a pre-approval from a lender. Now you're completely free to use whichever lender you prefer. Maybe you've been at the same bank for several years and you really want to work with that bank, or ask your real estate agent if they have any recommendations. We work with so many lenders day in and day out, so we have good recommendations for who communicates well, who is easy to work with, who maybe has a good interest rate. So we definitely have a plethora of recommendations for you. Also know that if a real estate agent recommends a lender, it's just someone that we know, like, and trust, and who has done a great job for our clients in the past. We in no way receive any type of compensation for that referral to the lender. The purpose of getting a pre-approval is to know what you're able to afford, what those monthly payments look at. A lot of times whenever buyers get a pre-approval, they're often blown away by the amount of money that the bank approves them for, and they kind of gasp and think, I could never buy a house for that much. And that's totally fine. Think about what your goals are, what your lifestyle preferences are. Maybe you have a goal and you want to pay off your student loans early, or maybe your car is on its last leg and you know that in a few months you're going to be picking up an extra car payment, or maybe you like to go out to eat a lot, or you like to go to concerts. So figure out what your lifestyle preferences are, and then from there, tailor your monthly payment and your targeted buying range around what you're comfortable affording. Most pre-approvals are good for 90 days, so I often have first-time home buyers saying, well, I know I don't want to buy for 6 or 9 months out, so it's way too early to get a pre-approval. And I tell them, no, it's perfectly fine. You want to get one now because you want to start figuring out what your target budget is. It's not a big deal if your credit needs to be pulled again for an updated pre-approval. As long as you have decent credit, it's not going to ding your score very much and you'll be totally fine. A few of the documents that a lender will ask for whenever you're getting pre-approved are 2 years of tax returns, 2 months of bank statements, your social security number. So as you know you're getting ready for your pre-approval, maybe start gathering those documents to give to the lender, and that'll make the process go smoother for you. You're also totally free to shop around lenders a little bit. If the lenders pull your credit within a short amount of time frame, again, it won't ding your credit score very much, and it will all be coded with the same code. So shop around lenders a little because they'll all charge various fees and offer various interest rates. So it doesn't hurt to see what your options are and what's available to you. Click the subscribe button because this ends the first week's video, and I want to make sure that you don't miss part 2 of the series of how to buy a house. So click the subscribe button and I'll see you again next week.